This is Nightly Business Report with Bill Griffith and Sue Herrera.
Both parties have agreed to suspend the tariffs.
Trade truce, tensions ease, stocks take off, and a number of companies are set to benefit if the spat cools further.
Wall Street rally. The Dow closes back above 25,000, but the market may not be out of the woods just yet.
What rule, named after the Federal Reserve chairman who proposed it?
Lexington, yeah, 5 seconds.
Volcker.
The best and the brightest. Meet the economic leaders of tomorrow. Those stories and more tonight on Nightly Business Report for Monday, May 21st.
And we do bid you a good Monday evening, everybody. A surge in stocks to start this week. The industrials powered the major indexes higher after the Trump administration said that the trade war with China was on hold. So with tensions easing, excitement on Wall Street is building, and today that excitement sent the Dow up more than 300 points for much of this trading session. And here are the closing numbers. The Dow closed up just under a 300-point gain to 25,013. The Nasdaq added 39, and the S&P 500 was up 20 points. We have two reports for you tonight. Kayla Tausche takes a look at the cooling of those trade tensions between the U.S. and China. But first, Bob Pisani has more on today's stock market rally.
Call it a headline relief rally. Stocks surged after U.S. Treasury Secretary Steven Mnuchin declared a temporary truce between the U.S. and China. Easing trade tensions are a major tailwind for the market. So no surprise that news gave a boost to trade-oriented industrial names like Boeing and Caterpillar, United Technologies. All of them were up sharply. But even before today, cyclical stocks have been leading the charge this month. Sectors like technology, industrials, materials, and energy that are especially sensitive to the health of the economy, all up 5 to 6% in May. And that's the kind of leadership investors like to see. Right now, the large cap S&P 500 is less than 5% below its record highs. And small caps are hitting new highs for a fourth straight session. Selling pressure is dropping a little bit. Buying power, while not soaring, is building modestly. But the markets aren't out of the woods just yet. Several headwinds still remain. So commodities are still on fire. Many of them are at 3-year highs, and the U.S. dollar is at its strongest levels of the year. The yield on the U.S. 10-year Treasury note is also near a 7-year high. The markets can handle all this as long as rates don't move up too rapidly and as long as the markets are convinced that we're still growing throughout the year. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.
And now to Kayla Tausche with details on our trading relationship with China and what might happen next.
A range of products from flat-screen TVs to golf carts imported from China will be spared from tariffs, and China will back down on new fees on Teslas, whiskey, and soybeans in return. For now, the economic ceasefire welcome news for the market as Treasury Secretary Steven Mnuchin denied a trade war was approaching.
This has been a trade dispute all along. It never was a trade war. It's a trade dispute on significant issues.
China says it will buy more U.S. agricultural and energy products to help the U.S. chip away at its trade deficit. On Twitter, President Trump praised the impact of the potential deal on farmers. Trump wanted a $200 billion deal, a figure on which China was mum. The U.S. is also reviewing its enforcement of Chinese telecom giant ZTE, a direct request from President Xi. While the details and timing of the deal have yet to be worked out, the threat of tariffs remains.
You cannot remove tariffs as a negotiating tool or an enforcement tool from this process. You cannot do that. And therefore, I don't think we're saying tariffs are over. Far from it.
The truce does not extend to imports of steel and aluminum, and there are worries it does not address the big issues around forced technology transfer and theft of intellectual property. But officials stress this is a work in progress.
This is not a term sheet for a corporate finance deal. This is a very complicated negotiation with the two largest economies in the world.
Commerce Secretary Wilbur Ross is going to China to work out the details of a deal. A date worth watching is June 12th, when a summit between Trump and North Korea's Kim Jong-un is planned. Sources say there's a reluctance to rattle China and put that meeting at risk. For Nightly Business Report, I'm Kayla Tausche in Washington.
But the delay in implementing tariffs on Chinese steel imports weighed on the sector, sending shares of AK Steel, U.S. Steel, and Nucor lower in trading today.
But a number of companies could benefit from this truce. Joining us tonight to talk about that, Jon Patrese is back with us. He's Managing Director and Portfolio Manager at Point View Wealth Management. Welcome back.
Thanks for having me on.
We should point out the companies we're going to talk about, you wouldn't exactly jump into now just because of this truce, right?
Yeah, that's right. I mean, we don't recommend buying this market at all, simply because that the trade wars have been tabled. You know, this is turning into a mini-series. You know, trade wars, the saga continues.
Right.
Just as if you shouldn't sell the market on potential tariffs, you shouldn't be buying today because of this.
But do you set up a wish list, so to speak? Because, you know, as Mr. Mnuchin said, it's been a trade dispute, not a trade war. I mean, obviously that's the administration's standpoint on it. But if you're a longer-term investor, what do you look for if you want to add to your portfolio?
Right. Well, I think the beneficiaries from not having trade wars are clearly on the industrials and the auto side. I mean, there's a reason why Boeing's up 3.5% today. And so Ford and GM and some of the car players, they're clearly going to benefit by not having tariffs. And at the end of the day, listen, we all benefit by no tariffs because companies are going to pass it through to you and I at the register. So the economy should continue this synchronized global growth pattern without tariffs.
And you had GE on that list there as well. But as the year progresses, the dollar's starting to strengthen here. That's not going to help these companies.
No, well, it depends. You know, it's not going to help clearly on the export side.
And the trade deficit,
and the trade deficit. But, you know, that's going to be more in line with what the Fed does and what the Fed says coming up in the June meeting.
What about technology? A lot of it has been beaten down, certainly. Sure. Is it too early to take a look at tech?
No, we definitely like some of the suppliers, like a company called Flex International. The ticker is Flex. And they're the middle market between a chip maker and, say, a Cisco. So they go out there and design and make the product. It's a very low-margin business, so tariffs would really negatively impact their business. But they basically supply the entire tech hierarchy.
Once again, good to see you, Jon. Thanks for joining us.
Thanks for having me on.
Jon Patrese with Point View Wealth Management.
Well, the Trump administration is also outlining new demands on Iran. Secretary of State Mike Pompeo said a new nuclear deal would require Iran to stop enriching all uranium and pull out of the Syrian civil war. The list of demands also comes with the threat of more sanctions.
These will indeed end up being the strongest sanctions in history when we are complete. The regime has been fighting all over the Middle East for years. After our sanctions come in force, it will be battling to keep its economy alive.
Iran denounced those demands and rejected the allegations.
Iran, of course, is closely watched by the oil market since it is an OPEC member. Venezuela is also a member of the oil cartel, and it held elections over the weekend. And already those elections are being called illegitimate by some and could lead to stricter international sanctions. In fact, just today, President Trump signed an executive order restricting Venezuela's ability to liquidate state assets. That helped the price of domestic crude as well today, which settled near its 2014 highs. And a rise in oil, of course, means a rise in prices at the pump. The average cost of a gallon of gas has now risen 10 cents over the past 2 weeks. It is now up to $3 a gallon.
In Washington, the Supreme Court upheld a ruling that companies can use arbitration clauses in employment contracts to prohibit workers from forming a class action lawsuit over workplace issues. The court's decision could impact 25 million employees who work under contracts. The decision is viewed as a win for business, and the vote was 5-4.
Time to take a look now at some of today's upgrades and downgrades. CBS's rating was raised, I should say, to outperform from market perform over at Bernstein. The analyst there cites 4 possible paths forward for the company amid its boardroom drama with major shareholder Sherry Redstone. Price target $65. The stock closed up a fraction today to $52 even. Shares of Campbell Soup were downgraded to an outright sell from neutral at Bank of America. The analyst calls 2018 a transition year now under the new interim CEO, who will be initiating an extensive strategic review process. Price target $31. The stock fell 2% to $33.58.
And another call from Bank of America, but this one is an upgrade of Dillard's to buy from underperform. The analyst says the Southern retail chain will benefit from a strengthening energy economy since Dillard's has a large presence in Texas and Oklahoma. The price target is $89. The shares were up 3% to $79.87. VF Corp is rated to buy in new coverage at Argus. The analyst cites strong demand for some of the company's brands like Vans and North Face. The price target is $101. Shares of VF Corp rose 1% to $80.92.
Still ahead, a new threat. Hackers are not just after companies or their data. Now they're going after something else. We'll tell you what it is.
Consumer Reports will not recommend Tesla's Model 3. The magazine said there are a few features that are preventing the group from giving the vehicle a full endorsement, such as long stopping distances and difficult-to-use controls. However, the group did praise the agile handling of the Model 3 as well as its battery range. Separately, a Wall Street firm raised its price target on the stock to about $500 a share, and that helped lift the stock in trading today.
The transformation of General Electric continues. The company is merging the bulk of its transportation business with railroad equipment maker LabTech. It's a deal worth about $11 billion. GE and its shareholders will end up holding 50.1% of the merged company. The deal is all part of GE's strategy to pare down to three core businesses, namely power, aviation, and healthcare. This is the biggest deal done by CEO John Flannery since he announced his plan to remake the conglomerate. Shares of GE and LabTech both rose in today's trading. GE is up about 10%, by the way, over the past 2 months.
Well, from a stock that is rising to a sector that is falling, Consumer Staples is the worst performing group this year. The sector is down about 13%, while the S&P 500 is up 2%. Is this a sector to steer clear of, or are there bargains waiting to be bought? Here to talk about that is Nancy Tengler, Chief Investment Officer at Heartland Financial. Welcome back, Nancy. Nice to see you.
You too, Sue.
Now, are you finding value in this particular area? Because it has been a really rough patch.
It has been, and as a value manager and someone who is contrarian by nature, I would like to pound the table, but I'm still concerned that there's structural change going on in this group, and it's not helped at all by a stronger dollar. So there are a few places we like, but not the entire group.
Why have they gone down? What happened?
Hey, Bill, it's good to see you. So I think a couple of things. Certainly there's a pricing pressure from the online providers and from the big box retailers. So the power lies in, it is shifted. It lies in the hands of the Amazons and the Walmarts and the Costcos of the world. So we actually own and have big commitments to both Walmart and Costco in our portfolios. We think they are the ones that are carrying the cards and have the ability to be Amazon proof. In the case of the underlying food and beverage companies in the staples sector, we do like Coke. That management has turned the company around and has dealt with the pricing pressures and the lack of growth in the emerging markets. And the way they've done that is by shrinking packaging, so you pay more per ounce for Coke, but it's healthier because you're not drinking as much. They've improved the packaging, and then they've also added product in the carbonated beverage section. So but it takes a long time for these big companies to change, and the others in the group have not made the strategic changes they needed to make.
And one of them, I think, is P&G. You say you're considering exiting that position. What is it that the management has not been able to do to convince you to stick with the stock?
Well, so P&G's CEO, after wasting time fighting a proxy battle with Nelson Peltz for almost, I don't know, close to a year, he recently said on their disappointing most recent earnings call that we have a lot of very big businesses in very difficult markets. So you just think about it logically. If 40% of trade is denominated in the dollar globally, that represents 4 times our share of trade. That means that if my currency in Venezuela, Argentina, Brazil is depressed, I have to pay so much more for Tide a P&G product than I did before, and so I'm going to find another product. And the managements have not anticipated or adapted to that change, and they've not improved their distribution through the right channels.
On that note, Nancy, always good to see you. Nancy
You too. Thanks so
Tankler
much.
with Heartland Financial. Bill?
Sue, Fifth Third inks a multi-billion-dollar bank deal, and that's where we begin this evening's market focus. The bank said that it would buy Chicago's MB Financial for about $5 billion as it looks to expand its presence in the Chicago market. Fifth Third also said the deal would create substantial savings within a couple of years. Fifth Third investors, though, were not exactly fans of the deal. They sent shares of the bank down nearly 8% to $30.90. Meanwhile, those shares of MB Financial took off, rising almost 13% to $49.28. And after speaking with a number of potential buyers, LaSalle Hotel Properties said that it has now agreed to be bought by private equity firm Blackstone for just under $4 billion. LaSalle said rival Pebblebrook Hotel Trust was among the interested suitors otherwise. Blackstone shares finished up 1% to $31.68. Shares of LaSalle climbed by 5% to $33.61. And hospital operator HCA Healthcare and private equity firm KKR are reportedly teaming up on a takeover bid for Envision Healthcare. Reuters said that the two are working together to create what they hope will be a compelling offer, even as other buyout firms eye Envision. Envision has requested that all offers be submitted this month. HCA shares were up 1% to $103.86. Shares of Envision were 3% higher today to $43.29.
Pinnacle Foods has reportedly hired investment firm Evercore Partners to consider strategic alternatives. The New York Post says activist investor Jana Partners has pressed the maker of Duncan Hines baking mixes to merge with its rival ConAgra Brands. The two companies have reportedly discussed a potential combination in the past. Shares of Pinnacle Foods were off a fraction to $62.93. Entertainment company World Wrestling Entertainment has reportedly found a new broadcast home. As first reported by ESPN, 21st Century Fox's network reached a, quote, massive deal with WWE to air its SmackDown Live show. And the report added that the deal will take effect October of 2019. Shares of WWE were up more than 12% to $57.86. And restaurant equipment company Middleby is buying United Technologies ice cream and frozen drink machine services for $1 billion. The moves comes as United Technologies focuses more on its core business, while Middleby looks to grow its footprint in the commercial food service industry. Middleby shares were off a fraction to $103.98. Shares of United Technologies rose 2% to $128.05.
Up until recently, hackers have mainly been focused on breaking into and stealing sensitive information. But now get this, they have the capacity to change that data that they hack, and that could have far more devastating consequences like manipulating stock prices. Andrea Day went to IBM Securities headquarters to learn about this latest cyber threat.
Every day is an aha moment.
IBM Securities' Caleb Barlow spends his days watching cyber criminals and their latest twists and plots. But there's a new threat that keeps him up at night.
What we're moving into is a new scenario where the bad guy goes in and changes data.
Modifying data, a huge problem, he says, that can cause far more devastation than just stealing sensitive information.
How tough is it to spot?
It's extremely difficult to spot data manipulation because you have to not only identify that the attackers broke in, but you have to find the exact data element that they changed. Otherwise, you can't trust anything in the system.
And according to Barlow, it could even impact a company's stock.
There are lots of ways a bad guy can profit in ways that appear to be even legitimate. You can short a stock. You can invest in another part of a supply chain. And that becomes a major source of attack that we're really concerned about moving forward.
So what can be done to stop it?
If we can figure out who they are, what their motivations are, we can often block their attacks.
So IBM Security is developing intimate profiles on the latest cyber criminals. And shocking to know, they act just like a legitimate business.
Go to work Monday through Friday, they take the weekends off. We know this because we literally see the attack volume drop off on a Saturday and pick back up on a Monday and in particular Tuesday. There's the boss, which think of them as the general contractor, and they may have dozens and dozens of subcontractors with unique and specific skills.
He says they have employee reviews, even meetings to decide where to invest lots of stolen cash.
These are highly legitimate, illegitimate businesses.
And Barlow says the challenge here is that companies must bolster their defenses and put in place new means of detection so they can spot data changes before it's too late. For Nightly Business Report, I'm Andrea Day.
Coming up, do you know more about the economy than a high schooler? Find out coming up next.
The number of 401k millionaires is at a record. As we told you last week, a new Fidelity Investments report says that there are now more than 150,000 accounts with balances of $1 million or more. But having all that money stashed away in a traditional employer-sponsored savings account doesn't necessarily mean that you'll be a millionaire in retirement. Our senior personal finance correspondent, Sharon Epperson, is here to explain why. How much of an increase in 401 millionaires are we talking about here on these accounts?
We've seen in just 1 year a 45% increase, according to that Fidelity data. We have seen a jump to that above 150,000 mark for the number of accounts that are over $1 million. Now, these folks are folks who have been saving for quite some time, working for about 30 years. The average age is 58. And keep in mind that while a third of that rise in what they've seen to that $1 million mark has been in contributions, about 2/3 has been market returns over the last 10, 15 years. So that's a big part of why they reached that number.
So let's say I'm one of those who has the $1 million. How far is it going to get me?
One thing to keep in mind, we're talking about traditional 401k plans, and so that is pre-tax money. And when you take that money out in retirement, you have to pay taxes on it. So if you're in a middle income bracket and you're, say, in the 24% tax bracket, that $1 million is closer to $760,000. Also keep in mind where you live means a lot about how far that's going to go. Go Banking Rates did a survey, and they looked at the cities where $1 million will last you. And in Houston, Texas, it's great. It's going to last you nearly 26 years because the average expenses you're going to have at 65 or older are going to be about $40,000. But in New York City,
it's measured in months.
Exactly. It's more like 17 years, 6 months. So a lot less because you're going to be spending $55,000 just on expenses, probably.
In the interest of diversification, though, what other options do we have beyond 401ks to help us reach those goals of maybe $1 million?
As you know, a lot of folks are really focused on asset allocation. Tax diversification is very, very important as well. And about 70% of employers who have 401k plans now offer a Roth option. And what that means is you can be building money tax-free in a Roth account. You're not going to get that tax break that you would on pre-tax money right away, but you're going to get it in retirement. So that money will actually be your money, not money that's going to go to Uncle Sam. So you want to contribute the max you can to a Roth 401k if offered, a Roth IRA if you can. The maximum contributions there are $5,500 this year, $6,500 if you're 50 or older. And a lot of folks have side gigs. You may not be fully self-employed, but if you have self-employment income, look into a solo 401k or a SEP IRA and think about converting a traditional IRA also to a Roth to get that tax-free income. But again, you need to talk to a financial advisor. You need to talk to an accountant about this because it can be complicated, but it can be worth it to get tax-free income in retirement.
Worth the price of admission right there. Sharon
There you
Epperson,
go.
thank you as always.
My pleasure.
Well, how much do high schoolers know about economics? The answer is a whole lot, as Steve Leisman found out when he quizzed the next generation of economic leaders.
At the National Economic Challenge, put on every year by the Council for Economic Education, the question is not if the kids are smart.
Consumer surplus decreases, producer surplus increases, and net welfare decreases.
That is correct.
That is correct. Well done. The question is how ridiculously smart they are, almost to the point of reading minds.
Monte Vista, you have 5 seconds, Mr. Vishal, to answer.
Structural unemployment.
That is correct.
All right. That's totally unfair for people at home that are watching on TV. I'm going to read the full question. It's no wonder the kids are brilliant. To get to the finals of the National Economic Challenge, you have to be the best and brightest of 11,000 kids who compete across the nation. This year, Monte Vista High School from Cupertino, California, won the David Ricardo Division. That's for kids with just 1 semester of economics. What do you like about economics?
It's very applicable to the real world, and Honestly, I just wanted to give a shout out to all my teammates here. Without them, I wouldn't have this high of a level of interest in economics.
And Lexington High School from Massachusetts won the coveted Adam Smith title for kids in AP and honors courses.
Price and quantity increase.
That is correct.
Nan Morrison, head of the Council for Economic Education, explains the value of an early economic education.
To let kids know how to operate in the real world. Better success, better outcomes, better decisions for their families, themselves, and their countries.
For the second year in a row, Americans faced off against the Chinese in an international division. Americans won both rounds, but the Chinese competed strongly. It's too bad we can't let these kids negotiate the country's trade problems. For Nightly Business Report, I'm Steve Leisman.
Fortune magazine is out with its annual ranking of the nation's largest corporations, and Walmart tops the list for the 6th year in a row with $500 billion in reported revenue. In fact, it's the first company in history to generate that much in annual sales, and it is more than double second place ExxonMobil, which had $244 billion in revenue. In third place, Berkshire Hathaway at $242 billion. Apple fell one spot to fourth place. Amazon moved into the top 10 for the first time. It's now ranked 8th. All 500 companies represent 2/3 of the U.S. gross domestic product, with nearly $13 trillion in revenue combined.
Before we go, here's another look at the day on Wall Street. The Dow advanced 298 points. The Nasdaq added 39, and the S&P 500 was up 20. And that is Nightly Business Report for tonight. I'm Sue Herrera. Thanks for joining us.
By the way, happy birthday, Steve Leisman, today.
That's right.
I'm Bill Griffith. Have a great evening. See you tomorrow.